Gemini 2021 State of US Crypto Report, reviewed by Mr. R. I can be found at Twitter at misstep_. Hello again, thanks for joining. Of course, I'm not a financial advisor. This video is produced by myself as a way to document my own analysis and current marketplace evaluating, and to build conviction in the positions I take in my own portfolio. Gemini's report outlines the data collected in a survey, offering a unique look into the mindset of the population at the time in the United States. Our outline for today is Gemini, the survey's methodology, demographics, crypto curious, interest is not equal to knowledge, initial investment, investor strategy, missing data, and my own personal thoughts. Gemini was founded in 2014, currently offers over 50 crypto products to the retail investor. They also offer custodial services, they have a lending program, and lastly they also have their own stablecoin. Estimated user base is about 13.6 active users. The US Crypto Report is based on a total sample of 3,000 United States adults aging from 18 to 65 with a $40,000 income being the bare minimum. The survey respondents were polled on October 19th to November 16th of 2020 and included 921 self-identified current crypto asset holders, 1,697 consumers who are interested in learning about crypto. Gemini divided the survey into holders and curious. There are 4 key data points that were found that we need to get clarification on. Holders curious, age, income, and locations. On screen are the percent of holders. Some of the numbers were not given in the survey about the full background of the groups. Gemini does state that 921 people say they hold crypto. Looking at this group, on the bar chart stacked on the left, you can tell that the male's dominance overall of the group is 74%, approximately making up 681 people of the 3,000, meaning that they make 22.7% of the overall survey group. When looking at the distribution from ages, the males group we see max at 38% in the age range of 35 to 44. Moving on to the females, they do make 26% of the holders, that's 239.46 people of the 3,000, meaning they are 7.9% of the overall survey. The max group of holders are in the age group of 25 to 34, with that being 43%. This is the highest of the holder group and the curious group as well. The curious group. The curious group is made up of 1,697 people of the 3,000 in the survey. This amounts to 56.56% of the overall people. At the time, we will start to look at the females. They hold 53% of the group, coming in at about 916 people. That would make up 30% of the survey, nearly 1/3. Their distribution of interest is heavily weighted outside the 18 to 24, just being 2%, while the rest are above 22%, with the max being the age group again of 35 to 44, just like in the previous one. When looking at the male group this time, we see that much of the age group's interest is in the 35 to 44, being 29%, and the smallest, similar to the female, is in the age group of 18 to 24 with 3%. When looking at the two groups, holders and curious, in the categories of income, age, and location, 2/3 are in favor of holders, being the income and lower average age. Income at 111,000, average age at 38. While looking at location, we find something different. The locations given for the holders, 2% living in urban and suburban areas, while 26% live in small towns or rural areas. When we move on to the curious group, we find lower income, a higher average age, but location distribution is quite different. We see 46% living in the urban or suburban areas, 35% living in small towns or rural areas. Unfortunately, Gemini's report does not give us a full picture of the population distribution. Although there were 3,000 people in the survey, it's possible many of the people decided not to answer the question about where their location is. Up next, we'll be looking at crypto curious, the possible market size, the trends, and the investments. What is the possible market size? Gemini breaks down the population into 3 groups. We have the current crypto owners, 14%, the crypto curious, 63%, the disinterested, 23%. Gemini points out that they estimate 21.2 million people fall into the category of current crypto owners. For context, the US Census of 2020 reportedly had 258,343,281 people above the age of 18. All these people could be potential customers. Of that, if we take 14%, we get 36.1 million. Now we have a gap of 14.9 million between the census and the Gemini report. Of the 63% in the crypto curious, 13% have intentions of buying crypto the next 12 months. That's an additional 19.3 million people, based on Gemini's report. Of those, the category of women make up 53% of them. That means that in 2022, about 10.2 million women will be purchasing cryptocurrencies, and 9 million men will be doing so. As you can see on the graph, when 2020 arrives, the proportion will change dramatically. When putting data from the report to find the highest growth in age, females, since they make up 53% of the new curious group entering crypto, notice that the age groups of 35 to 44 will have the highest growth of 3.51%, and those in the age of 55 to 56 will see a growth of 3.25%.
So, does interest equal knowledge? We'll be looking at asset awareness and disparity. While the group of crypto curious in the United States adults is growing, general knowledge about cryptocurrency seems to be consolidated around one asset, Bitcoin in particular. On screen are 10 different assets that were given to the surveyed members. As you can see, Bitcoin has 95% awareness, Ethereum having 38%, and the rest having 20% or less. While notably on the screen, you'll see check marks. These check marks are those crypto assets in the top 10 for market capitalization. We have Bitcoin, Ethereum, Tether, XRP, Binance Coin, Cardano, and Polkadot. Of these ones, 4 of them are below 10% awareness. This is quite concerning when considering a person opening a new portfolio or position in investing. Disparity of knowledge. During the report, surveyed members were given 5 questions. Are they extremely knowledgeable, very knowledgeable, somewhat knowledgeable, not very knowledgeable, and not knowledgeable at all? When looking at the comparisons between the two groups of current and curious, we notice at the somewhat level, the curious and the current are only separated by 10%, while others are separated by such a larger margin. Initial investment, holding period, price history, and portfolio. The holding period of a crypto asset will greatly impact the person's return on investment. The report had 5 categories labeled out: within the past 6 months, 6 months to 1 year, 1 year to 2 years, 3 years to 5 years, and 5 years more. As you can see in the proportions, 40% of those surveyed said they've held a crypto asset for 1 to 2 years. The smallest group being the 4%, holding for 5 years. The middle ground in this survey seems to be the 3 to 5 year period. The survey concluded on November 18th of 2020. I took the prices for Bitcoin going back 5 years, all the way back to 2015. Those in the survey mentioned they were in 5 different groups. When we look at the group that had held Bitcoin for the longest, the 5-year period, in 2015 the price was $333. If that individual held till today, they could have had a return of 4,930%. The worst case scenario would have been purchasing Bitcoin 6 months to 1 year ago, having a price of $8,537 in 2019 and only being up 96.22%.
The crypto assets that made a portfolio onto the survey were Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. Bitcoin dominates the areas of being in a portfolio in 2 ways, having owned at 87% and currently owned at 84%, seeing only a 3% slippage. Oddly, Bitcoin Cash has the highest amount of dollar average value of a holding, being $11,078, while Bitcoin has only a mere $8,512. Next is investor strategies. 69% of the people surveyed believe that they will be holding crypto for long-term investments. That would mean, if going back to 2015, if someone held for 5 years, that 4%, they could have returned 4,930% in the future today. Trading is made up 36% of the survey members. With many exchanges and DEXs available, such as Coinbase, Binance, Uniswap, SushiSwap, 1inch, and many more, the potential for a survey member being able to turn their capital and trade it on a daily basis is quite possible. Lastly, they have 3 questions around purchasing. 2 of them include physical goods and online goods. Combining those 2 percentages of 27 and 12 respectively, we could total 39% of the surveyed members. That means that they're looking to handle their online goods and online tokens into physical goods. Notably, recently AMC, the theater company, has allowed cryptocurrencies to be used for purchases of tickets. Lastly, the question about privacy. 11% of the surveyed members show that they enjoy the privacy nature of the crypto assets. When sifting through the report, I found some data missing. The 3 areas that come to mind are the disinterested, economic status, and overseas outlook. While the survey members are broken up into 2, owners and curious, the third group was not mentioned as much as it should have been, disinterested. They make up 12.8% or 122 of those surveyed. We have little to no information about why they're not interested in crypto assets or why adoption may not be for them. Getting those answers to questions would be useful for an overall picture of the group. Also to mention, the minimum income was $40,000 USD for the survey group, but when we look at the breakdown between those in the current ownership and curious, they all had incomes over $100,000. A graph showing down the breakdown of income brackets per survey member would have been quite interesting to see. Education and employment are another area that are not in the report but could have been mentioned. The economic status around the world has changed quite substantially since 2019. With COVID, QE, high unemployment, political distress all across the nation, this could have impacted the survey's answers and those conducting analysis. In the future, having another report, possibly in 2020 or 2023, could be used as a contrast to what we see today. While the report was mainly focused on the US, and that was in the name, such countries in the G7 could be useful for comparison. Those such as South Korea and Japan have notably been early adopters in integrating it into their systems. By using them as a foil to see what is possible in the future, we could have a better idea of how the crypto markets are evolving. My closing thoughts on the Gemini report are as follows, breaking it down into 4 sections: the retail, high net worth individual, private equity, and FSI. Gemini allowed us to see into the demographics, opinions, investments made, and what could be made in the future. BTC is most notably the well-known and most held onto crypto asset. Males dominate the marketplace currently, females are looking to enter at a quick pace, and the average income for most holders is 6 figures. While we did get information about cryptocurrencies that are available in the marketplace, not all of them mentioned in this report were in the top 10 for market cap. This report may be limited in that way, but it's good still to have. When looking at it, the 4 lenses of retail, high net worth individual, private equity, and FSI, starting with retail, a retail investor must quickly assess whether or not they have an income above or below $100,000. If below, they should continue to invest at a moderate rate and consider their risk carefully. A high net worth individual has many more options. They have the opportunity to either invest in a trust or a hedge fund, being that they could be an accredited investor. If their money is stored inside of one of these investment vehicles, they'll have the ability to have professional traders manage their money and take advantage of the market fluctuations, and even hold themselves on a private storage or cold wallet. Looking at the private equity sector, family offices or small investment firms could use this as a launch pad for their baseline research and understand their new clients' needs, wants, and opportunities. Lastly, looking at financial service institutions, this report could provide little information overall, but be a comparison to see whether or not they have the same collective data. Since I personally fall into the retail space, I've been steadily increasing my monthly purchases of crypto assets in my portfolio, with a long-term buy and hold strategy, not worrying about the day-to-day changes in prices. Overall, I'm confident that the prices will appreciate with time. As always, thank you for watching. If you're looking to find or contact me, I'll be found at Twitter at misstep_.